Let's turn now, though, back to the CME Group in Chicago. Larry Shover, Chief Investment Officer at SFG Alternatives, joins us now. And there is, I guess, just one thing that is on everyone's minds, and that is fiscal cliff negotiations. I wanted to ask you, because, I mean, we've been seeing, you know, the letter from the Republicans to Obama, and then he's knocked that back. Still no movement there on agreeing to any tax hikes for the wealthiest Americans. What do you think? I mean, is there going to be a deal, Larry?
You know, right now they are really, really far apart. But what's happened just in even the last 24 hours, I think the market is coming to terms that perhaps if we will go over this fiscal cliff, but there'll be like a boomerang effect, something Australians probably know a lot about, but something where January 1st, you know, Congress will act very quickly, get some Band-Aid approach, get us to a place where we won't absolutely fall over the cliff and just remedy the situation for the time being. I mean, nothing's going to be fixed to the extent that's going to make anybody happy. And let's be clear, John Boehner is getting yelled at by both the conservatives and the Democrats right now. He's in a very, very tight spot. So I think what we're seeing is a mini risk-off rally, and we're seeing like the U.S. dollar almost losing its safe haven status right now, just temporarily, because people are just realizing that nothing is going to get figured out anytime soon.
And the sticking point seems still to be, though, that the tax rates, the Bush-era tax cuts.
Yeah, no, it really is, and really it's stunning when you think about it, because, you know, raising the taxes on the top two rates is only going to bring in $8 billion of revenue. And I mean, that's a great thing from public policy standpoint. We have a $1 trillion deficit or shortfall in 2013. So, I mean, we need to find a lot more money than that. I mean, but you're right, that is a sticking point, and the conservative side of the Republican Party does not want to move on that.
It's interesting because I'm just reading through your notes. You've got a very interesting zoological comparison here that I guess best describes what's going on with the fiscal cliff.
Yeah, I mean, we think back to the days of my youth, the Mutual of Omaha, Merlin Perkins, looking at the hippo. It's 125 times bigger than a yellow-billed oxpecker, and everybody in Congress seems to be, you know, looking at the oxpecker and saying we have to fix this when you have a big hippo in the room, and that's what we're dealing with right now. It's a $1 trillion shortfall. That's 1 million or 1,000 billion. That's something that's got to be taken care of right now, and nobody seems to, you know, want to take care of it anytime soon.
Hey Larry, Tony Rumble speaking, and just talking about that trillion-dollar hippo in the room. I know some of the US commentators like John Malden, for example, saying that that is so close to being out of control that it's undermining the stability of the US economy. Obviously it is to a certain extent, but how quickly do you think it has to be fixed before global investors lose faith in the US market?
Well, you know, that's a great point, because that's something I worry about, and that's something that could change on a dime. I mean, right away. It is true that a lot of this stuff really does not have to be figured out until the spring. I mean, they can backdate a lot of things and put shoestring and bubble gum on things and make it work. But there's going to come a point in time where they will lose faith, and we'll see something turn very, very rapidly. So I think by the end of the first quarter 2013, if we don't have a credible plan in place to take care of entitlement reform, tax reform, etc., you're going to see a sharp reversal in risk assets from the U.S.
Just on the US dollar there, as you mentioned, and the way it's been behaving, do you think that, again, that also could be something that, you know, loses its traditional safe haven status, and that we could see it remain at these low levels?
Yeah, I think right now the safe haven is going to end up being the Australian dollar. Look what you guys did last night, and hey, the Australian dollar continues to rally. I mean, but no pun intended. I mean, that's a real thing that's happening right now. I mean, I cannot believe the euro-US cross is at 130 right now. I mean, who would have ever imagined that with just the turmoil that's going on in Europe right now? But that's where investors are going. They're starting to see that, hey, this thing might not get figured out anytime soon. And so I think people are just making necessary precautions sooner than later.
So with Europe, I mean, we've seen the better than expected terms for the Greek debt buyback there. What do you think? I mean, there was a sense that perhaps that's you know, the last of the risk events for a while. What's your view on Europe next year?
My view in Europe next year is going to be a wide U-turn recovery. It's going to be very, very hard. I mean, they have a lot of issues still that they have to resolve, but just think of the things that we were worried about this past year with inflation and with deleveraging, especially in Spain. Spain did not get all their funding, but they got pretty close. I mean, so with that in mind, I think things are going to start to recover a little bit. It's not going to be a V-shaped recovery by any stretch of the imagination, but I think they'll be in far better shape this time next year than they are right now.
All right, and I guess just coming back to the US and housing, because I mean we have been seeing some better than expected data out of that housing sector in the US economy. Is that your view? I mean, where do you see that housing market going over the coming year?
Yeah, I think, I think our housing market in the US definitely has stabilized, and I'm going to see that to continue next year. And like I said, even last week, I mean, I think the tailwind behind that is much bigger than most of us expect. And even though they can't figure it out in Washington, I do believe just any type of recovery, a small ratchet up in the housing sector, is going to help offset some of the other bad things that are going on in the U.S. economy.
And Larry, ongoing QE infinity and loose monetary policy in the US, good for the ongoing price of gold?
Yeah, I think they're going to continue to use unconventional ways to debase our currency, do whatever they can. I think it's going to be more of the same, and that's going to actually fuel the fire for risk assets. I don't think we're going to see the returns that we saw this past year, but I do think we're going to have a risk-on rally because the Fed's going to continue to debase our currency in any means possible to try to get our economy moving. And I think one thing that they're really worried about is business capital spending. That's something that's been such a laggard, and hoping that that will turn around in 2013.
Larry, great to get your thoughts. Thank you so much for joining us. Larry Shover there from SFG Alternatives.